Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. In our special series, Market Guru, we get you to meet the finest brains on the Lal Street, people and professionals who have weathered the storm over 2 or 3 bull markets, who've made money in all sorts of bull and bear phases, who have faced tremendous odds and have come out winners when it comes to creating long-term wealth for their shareholders, for their unit holders, and of course for themselves. Our guest today is none other than Mr. Sunil Shah, Fund Manager at SRE PMS. Namaste Sunil ji, and a very warm welcome to you, sir. We bring to you Mr. Shah at a time, ladies and gentlemen, when the level of volatility in the market is at a high. The aftermath of the tariff war has seen Indian equities rebound a bit, but is this a dead cat bounce or is this the beginning of a new market? This is what we are going to discuss with Sunil ji. Namaste Sunil ji. My first question to you, how do you see sentiment on the Lal Street at this point of time? Is the worst behind us?
Yes, Shelby, thank you so much for having me on the show. And yes, we are seeing a bounce back today for sure in the markets, just in sync with the global markets. However, if we just try to understand, this is clearly a pause in this volatile period. It is not an indication of an end, as we clearly understand. So the fight is on between US and China, and it is going to be there for a sustainable period of time. Now, having stated that, if we have to look at one number which is clearly reflecting everything that is happening in a country. So whether it is country like India, then the currency rate is the most important number for any country in the world. Just that number will reflect anything and everything that you do. But when you talk about US, because dollar is the reserve currency of the world, it is the 10-year bond yield of US which is so important. And once we saw that yield correct from 3.8 to almost 4.5, which is now at 4.3%, we saw that Trump was also, Mr. Trump, he took that stance of going slow on the entire policy reforms or whatever he's trying to do there. So we are in a bigger phase. If you look from the business class, which does the manufacturing activity, it's such an uncertain period. And uncertainty is something the stock market does not like. So we are in that phase for when the people who make the goods, they don't know how those policies will evolve after 90-day period. So currently they are manufacturing, they are selling the produce. But beyond 3 months, if you reach out to any company or any corporate in the export market, they are not sure if this kind of thing will continue in terms of manufacturing and selling the product. So it is going to slow down the global growth. It is really going to be a situation of unpredictability and no growth. And both those things are not in favor of the stock market. So we'll see volatile period of stock market in the world. Having stated that, Indian markets will be a big beneficiary and maybe we can touch upon it, but yes, world will have its own challenges and we are going to one such phase and clearly it's a not end of this entire journey. Maybe it's an end of the beginning, but it's not beginning of the end for sure, Shen.
Right. We are used to uncertainty and volatility in the market, and of course, the maximum gains are made at a time when not much is clear. Once it's clear, obviously, it's the retail that enters in. People like you have already creamed out the cream. Now, Sunilji, I want to understand. You have been holding cash for a while in on behalf of your clients. How is that cash level getting utilized? Has it thinned out? And if yes, where has that money gone?
Yeah, changes for the previous plans that I have, we have brought cash for the last 6 months and we are sitting on that cash. We are partially deploying it and in selective basis. So few pockets which clearly emerged to us where we be looking at investing will be the India-centric pockets, which is the next which are initiated from global vagaries. So cement can be one such sector which can be on the watch out for investments. Cement clearly because of two, 3 points. A, it's a local commodity. Global volatility does not have much of an impact on cement presence in India. It's a very, very cheap commodity at about 7 rupees a kg. A commodity is available, which to my mind is one of the lowest price commodities. And the most important point which I feel is there is a consolidation in the sector. The number of players are shrinking. And all these companies are putting up renewable energy plant. And power, as we all know, in cement is one of the most expensive cost items. So they are doing all this renewable source of power generation, which will clearly help to improve their EBITDA per ton over the next 3 year period. So with all those points in mind, I think cement is one such sector which we like apart from shipbuilding. So shipbuilding is another where government focus is there to keep on increasing domestic production of ships and huge orders. Commercial shipbuilding is also gaining momentum in India. There will be shipping clusters which will come in the next couple of years. So both these pockets, to my mind, look interesting to invest. Yes, Shelly, that's the process.
I'll request the PCI to kindly show the charts of Ultratech Cement, ACC, Ambuja, including Dalmia Bharat, Ramco Cement. Let's just have the cement sector being rolled out on the screen. Yes, there is consolidation, and if I am right, Sunilji, power costs are anywhere between 40 to 50% of the cement bag. Now, tell us what is your preference in the cement sector? Obviously, because there is consolidation, therefore, large companies are getting larger. But perhaps money would be made in buying mid caps that are targets of purchase. Where have you deployed money in the cement sector?
Yeah, Shelly, so as I stated, it's a work in progress in terms of investing the money. But clearly, if I look at companies and if I want to place the priority order, my preferences would be in the order of ACC being there right at the top, which is one such company which we'll be looking at investing eventually. There will be also Ramco Cement and Street Cement. Clearly, Shelby, the thought process is that the cycle is still evolving. So we would first like to be in those established names to start with, and then when this entire sector plays out, then maybe once you jump to the low and mid cap cement stocks, they will then participate in the rally and then they will give a higher price appreciation. So to test the waters and to see that the theme is working out fine, I think the preferences for us would be currently to evaluate the large cap pocket currently and then maybe as it gains steam, look at the mid cap ideas. So Star Cement can be one such where they play clearly on the northeast side of our country where there is huge demand which will be taking up in near term. So Star Cement clearly stands to benefit there from the available opportunity. As I stated, the last times and then the meetings. Yes, Shelly.
Star Cement and perhaps ACC are two picks that Sunilji prefers. Remember, ACC is a nationwide player and has been a part of our conscience since decades. It was earlier a Tata company. It then changed hands to become a part of the Ambuja setup, and then Ambuja in itself was purchased by the Adanis. So that's the corporate history of ACC. And of course, Star Cement has seen better days. All-time high was 245 that we saw somewhere in December, and no, all-time high is 1 second to the extent of about 260, 270, which we saw in May and May of 2024. And now at about 225. So, okay, we've discussed one large cap and one mid cap in the cement space. Shipbuilding. Sunilji, you've earlier had a preference for government shipbuilders. I remember talking to you on Mazagaon, Cochin Shipyard, Garden Reach. How do you look at valuations in this space? And what is your view on the shipbuilding industry against this backdrop of a broader war between China and the US? I believe there was a news item which said that Korean shipbuilders were keen to participate with Indian companies.
Yes, Shailji. So exactly the thought process there, you have also summed up in that right order. So shipbuilding is certainly going to see a turnaround or shift from those countries of China and Korea into these countries like India. There is incentives which is also getting rolled up on the government side in terms of developing the clusters. And recently, we have seen Cochin Shipyard trying to negotiate with Korean companies to put up a base here for ship repair business. That is one side. There is Garden Reach, which has got into an understanding with Swan Energy to use the unutilized port facility of Swan Energy to make ships. Now, Garden Reach has also got orders from German companies to make commercial ships here in India. So Garden Reach is currently full utilization of its capacities and has tied up with Swan Energy to use the unutilized capacities there. Overall, India's share in shipbuilding in the world is in very, very low decimals. So we are hardly not even 2% share in the global market. And government aspires to make this share upwards of, in higher teens. If we have to take that path, then all these companies will play a very, very important role in the overall development of the shipbuilding industry. So currently there are three, four listed companies that we have. There are two, which is the Hindustan Shipyard and Goa Shipyard, which is in the unlisted space. We have a small portion of L&D also into shipbuilding. So you have Kochi, which is doing large number of ship repair business, which will benefit on accounts of its, MOU with the Korean-based companies. You have Mazgaon Dock, which is doing large number of ship building on the submarine side. You have Garden Reach, which is doing a lot of work on the frigate side. And now all of them will play the role for even making commercial ships in the world. So I think this is an opportunity which can play out something like the defense and the railways 5 years back. If you see the entire opportunity which opened up in the defense and railways 5 years back, and then we saw the price appreciation. So right now, I think shipbuilding comes in that category. And if for us to play, maybe a bouquet of all those stocks can be also looked at. So when defense things rolled out, practically every company in the defense pack made money. Likewise in the railway pack as well. So if we apply the same analogy here in the shipbuilding, you hardly have a handful of five companies to look at. So instead of targeting any such one company, a bouquet allocation in this entire space can also give you returns over a period of time. So that's the thought process which Shandy, I think, can be applied here.
Okay, if I understand this correctly, what you are saying is buy a block of all five listed shipbuilders and leave it for 5 years. Is that right?
Yeah, exactly the thought process, Shandy. So rather than identifying a company and playing on any one such opportunity, because orders can move from one to another as well. So you can still participate by being there in all those five companies. And it's only five companies that we're talking.
Okay,
Yeah.
and these five would be Cochin, Garden Reach, Mazgaon.
You also have a Swan energy, which can also be beneficial.
Okay, so that
Yeah.
is four. The fifth one would be.
Yeah. If at all you want to get the entire pack of infra, maybe L&T can be one such company which
Okay,
has a
okay,
small division in Chennai.
okay. We'll stick to defense and Swan. Uh, An added corollary here, Sunil ji, would you feel? I'll request the PCR meanwhile to fire the long term charts of Cochin, Garden Reach, and Mazgaon. Some of these stocks have corrected very sharply and some modestly. According to you, are the valuations now in sync for a long term investment in these counters?
Yeah, Shenji, so each company has got a different production cycle here. If we talk about Garden Reach, one such company to start with, they are entering the phase of executing their orders. And the new trigger for the company can only come in if the new round of order announcement happens for Garden Reach. So government and company, meaning the company, eagerly awaiting the orders from the government, which can be soon in about next couple of months to a quarter or so. Once those orders come in for garden each, we will see a significant kind of price upside come into garden each because there will be certainty of growth in earnings right up till FY30. Similar analogy also applies for Mazgaon now. They are already sitting on orders and we just the company just has to execute the orders. In case of Cochin shipyard, it's more of repair works that they do. So now repair work is a very high margin business. And given the kind of location for Cochin shipyard, they can take very high DWT, the deadweight ton capacity ships for repair, which is the USP of Cochin shipyard so far. So for all three, there are different reasons to look at investing in those three companies right now that we are talking.
Okay. So that's the threshold that we are seeing as far as markets are concerned in the defense space, the subsector being shipbuilders. Sunilji, what is your view on the kind of positivity that the markets are exhibiting from their most recent 8 months lows? What do you think are the potential reasons that may have gone into the matrix of maybe institutional buyers at these levels? What according to you are they thinking?
Yeah, Shailendra, the first point that I think is extremely important for India is that from 1st of April, now you have a higher tax liability window, which means up till an income of 12 lakh rupees, you don't have to end up paying taxes. So we will see large amount of so-called unearned money coming into the system. For each individual taxpayer, the tax-free income has gone up by 5 lakh rupees. So I think that will really spiral large amount of consumption and financialization of savings in the economy. And the cascading impact of that on overall consumption and the multiplier impact which will come in terms of the financialization. So I think this is one such big number which will come into the country, and we are really underestimating the purchasing power of India and Indians. So that is first point which comes to my mind. The second is the ongoing tariff war, which is where there are two big global entities of US and China. And now, since large amount of production can also shift to other economies apart from China, eventually in this field, in this battle which is going on, India could be one such beneficiary. So export can also eventually be in favor of it. So that's
Yes.
the second point, which I think will really play out for our country. Uh, Third point, which I think is that now we have also softened our interest rates. Again, that will start to help to create the animal spirit. So all those things, and the most important, which I feel is from that 80% of the stocks have corrected by more than 30% from its all-time high. So there is this sizable price correction which has happened. Valuation is still not in favor. You have only 10% of the stocks which are quoting at a PE of less than 10 right now. So any major reaction post the result announcement. So I think fourth quarter numbers are not going to be so great, but once the result is announced, I think the bottom of the stock prices will be made at that point of time. So TCS, for example, the results came in, market was not enthused about it, but the bottom was made for the stock at least in the near term. So likewise, in the next 45 days to 60 days, we will see each stock specific wise price correction happen and the bottom will be made. So that's the thought process I think with which we need to look forward because India will have its own purchasing power and also it will do well in the global market as well. So that's the thought process I think Shailendra is playing.
Okay.
So
Sunilji, just as an aside, will this be a right time to buy uh, the the ITBs? The reason why I ask you this is that they've corrected very sharply from 49 rupees 66 paisa. I'll request the PCR to kindly fire the chart of Nippon IT ETF, and the price is somewhere like 33, 34, 35. Are these good enough levels to again re-enter this space? The reason why I ask is that while everybody is supremely bearish on IT, but sensible people uh, may probably want to buy into this 25-30% correction in the ETF itself.
Yes, Shailji, I agree with the thought process of being a contrarian investor where you end up making a lot of money. Now, whenever we look at this opportunity in the overall sector, the way in which I would like to play is be with the large cap established names, the top two, three, rather than do a generic investment overall in the cycle. Now the cycle is going to take a lot of time also to turn around because you have customers in US. The predictability of their orders is going to be challenging. The companies here also have given a guidance which is muted or could underperform. So yes, that's an uncertain situation, uncertain phenomenon. Be in the top two, three in case one has to be there. Now, when I stated about global opportunity, I think it's going to be manufacturing from China, which can take a big lead rather than the services which are as it is India's forte. So there is one point we need to differentiate in the thought process in sharing.
Uh, Continuing with this valuation matrix and the fact that you mentioned that price erosion as well as correction in valuations has been phenomenal, what is your overall view of the PSU pack? We have about 80 listed companies. Are there any specific sectors where you would want to buy into this very sharp fall? You've already mentioned the defense space on the shipbuilding side. But what about the rest of the pack? Maybe metal PSUs on the producing side, maybe PSU banks, maybe PSU power funding companies. How do you see that overall environment for PSUs now?
Yes, Shailendra, so in the PSU, I think public sector banks would be one such opportunity, which is still trading at low end of the valuation. Many of them must be counting at even good dividend yield in that fashion. So public sector banks is one such case. The balance sheet of those banks have clearly been much better. And the new concern which is coming in the lending business is on the personal finance. The personal loan book is questionable, and the growth in the personal loan book has been largely by the private sector players. So I think the headwind in the loan business, in the personal loan business, will be faced more by the private sector banks rather than the public sector banks. And the valuation differential still persists. So I think one would, if I would pick up in the government-oriented companies, I think public sector banks clearly remain my favorite on the grounds of valuation and also on the health of the balance sheet. I think. So that's the space that I would like to be. I would avoid the global commodities, the metal pack, given this entire challenge in the world in terms of how the prices will actually play out in the world. So would like to avoid those at least for the time.
Have you deployed some of the cash into PSU banks? If yes, maybe you could name one or two.
Yeah, so it's a staggered thing that I tend to do. The ones which I think can be there in the portfolio can be Canada Bank, is one such which is trading at a very, very low and attractive valuation. The other can be Bank of Baroda. So these are the two companies in the public sector banks purely meeting the valuation parameters.
Okay, ladies and gentlemen, we'll present to you the long-term chart of Canara Bank. Remember, this is a 5-for-1 split in terms of price that you see, and exactly on June 4th, June 5th, when we had the election results debacle last year, the price for Canara Bank was 129 rupees. And from then on, it slipped back to about 78, 79. This was in last week of February, and now at 92. So, a lot of margin of safety in terms of sheer change in price. Sunilji, let's shift gears and look at two very positive developments. The rate cycle, which has turned soft, the liquidity in the banking system, which has been increased dramatically by the new central bank governor, and of course crude oil prices at a 4-year low. How do you see this cocktail, this mix benefiting Indian equities? If yes, then what do you think are sectors worth negotiating with?
Yes, Shailesh, so yeah, that's one of the points which is in India's favor, in terms of the crude oil price. Recently, the OPEC has given guidance of soft crude offtake in calendar 26, and that is likely to keep the crude prices even at a soft level. So that clearly benefits for us as a country. There are ONCs which are there which benefit from this, but yeah, government really doesn't allow them. We saw it in the excise hike which happened. So it just benefit overall from the country's point of view rather than any particular sector here. Given that government will try to use them out or take advantage of the soft crude prices. So to my mind, I would not like to really play the ONCs or the oil E&P companies here, despite the soft crude prices. I think as a country will benefit more. The logistics cost, which indirectly benefit each and every company in the country. Those would be the beneficiary rather than ONCs or the E&P companies. So that's the thought process, Shailendra, which can have again on the overall soft crude prices. That's the way I would like to look at it.
Fair point. A couple of last questions, Sunilji. Uh, what would upset this apple cart?
Okay. What would upset this apple? Great question, Shailendra, as usual. So the way in which global situation is panning out, if this thing really continues and escalates further, and there is a complete slowdown and chaos in the world, that is something which can disturb our markets. So it's more of a global phenomena which is not predictable. That's the concern. That's the one. And if the trend really escalates further in terms of going back to those high tariffs, etc. So that's the fear that you, when from an India point of view, our macro is favorable. Again, for us as a country, it's only 20% of our activity which is in the global market as exports. Out of that 20%, it is just 10% which is good. So for us, we are 80% India-centric country, uh, which is going strong. So I think more of global concerns, more of global fears, rather than India-centric. So I think that's the way I think I would try to look at the markets. Rather than be more worried about, I would be more optimistic to use this opportunity to buy stocks, shares.
And my final question, Sunilji, as we were growing up in school, we used to read Shakespeare. And in that, there was this lovely line which says, "All that glitters is gold." Often have you heard that told? And uh, considering the kind of performance gold has given not only last year, but over the last 5 years or so, the humble Indian housewife has handsomely beaten fund managers. What is your view on gold, and how do you see this asset class performing against the backdrop of your own view of the market?
Yes, Shenji, the two are independent. Stock market is driven by cash flows and ROEs. Gold is a risk-free allocation that people do, meaning whenever there is uncertainty in the world, and we are going through one such phase. The prime thought process is that global central bankers are really shoring up their asset allocation into gold. The traditional quantum of gold purchased by central banker was about 500 metric tons per annum. And in the last 4 years, it has doubled to more than 1,000 metric tons. And that trend is likely to continue even in the foreseeable future, given this kind of policy announcements from US. So if the central bankers are going to take a big chunk of the annual gold production of about 3,500 metric tons or so, about close to 1,000 tons will be taken by them, and if they increase their allocation further, it does not seem that gold prices are likely to see any kind of correction from here. So gold definitely will be a good asset class to be in, and clearly housewives have beaten the best of the fund managers, and maybe will might continue to do so as long as the gold prices remain firm. and that is what it looks like at this point of time strategy. So that's the thought process.
Right, Sunilji, as usual, time is the last communist that we have on this earth, and it's equal for everybody. I would have loved to carry this conversation forward, but we are constrained by time. Thank you so much for your views, and I hope you have a stellar 2025, just as you've had in the last couple of years. Thank you so much.
Thank you very much. Thank you. Always good.
Always a pleasure. This, ladies and gentlemen, was Mr. Sunil Shah, fund manager at SRE PMS, a gentleman who's investing very slowly into mid-cap cement counters and prefers ACC, Ramco Cement and Shree Cement along with Star Cement as his top picks, which he's watching at in this sector. Within the shipbuilding space, he has a view on Masgaon Dock, Garden Reach, Cochin Shipyard from the government side, Swan Energy, and to some extent L&T, which has a shipbuilding division. Apart from that, he prefers PSU banks within the Sarkari setup, in particular Canara Bank and B1B, and of course has a preference for gold as well. Thank you so much for watching. There's a lot that's happening on Business Today Television. Please stay glued. I'll be back shortly.